Hello and good morning to our East Coast and West Coast and North American colleagues. Good afternoon and good evening to those of you dialing in from the Asian region. My name's Dipesh Patel, editor at Trade Finance Global, and I'm joined today by Anno Burghard-Weitzel, SVP of Strategy and Digitization at SureComp. And thank you very much to everyone who've taken their time out of their days to join us on this very exciting webinar, Taking Trade Finance Digital, Buy versus Build. So before we start, just a couple of housekeeping tips. So everyone is on mute, but we do encourage you to chat, to ask questions, to engage with us. It's lovely to see some familiar faces on this webinar. Do say hello, and we'll encourage you to be part of this conversation throughout the webinar. So look, let's get started. In an era where digital transformation is increasingly important, banks and corporates alike face so many different challenges in optimizing their trade finance processes. Now, off the back of SureComp's recent survey looking at accessing and adopting digital solutions, there were many pain points that were identified, and today we're going to discuss some of the survey's key finding and exploring opportunities for banks to overcome some of these challenges, especially when answering the key exam question here, which is, do I buy or do I build my digital trade finance solution? So with that in mind, Anno, welcome to the webinar and thank you for joining. It'd be lovely to hear a little bit more about you. Who are you, where are you from, and what do you do? And tell us a bit about SureComp.
Well, thanks, Dipesh. It's a pleasure to be here, and welcome everyone to this webinar. My name is Enno. I head strategy at SureComp, which basically centers around the question of what do we as vendor of trade finance solutions need to do to keep our solutions relevant in tomorrow's world. Now, who are we? SureComp is a trade finance pure player. We're a market leader in the space of providing financial institutions with trade finance backup solutions. We're a global company. Our customer base is spread globally. And according to, say, external available information, we seem to have the largest install base in that space, which makes us very proud. We're doing this for quite a while. We're active in the market for more than 35 years, serving banks and also corporates with trade finance solutions. And yeah, so we're often faced with that very question, buy versus build. So I'm very happy to have the opportunity discussing that in today's webinar.
Thank you very much. And I guess let's get started, but we'd like to involve all of you. So we're going to ask for a quick poll because we're going to base the webinar on your results. So if we could flash the poll up on Zoom, the question is, what is the most important driver for digital trade finance improvement? Is it streamlining the process in terms of that efficiency and automation? We know how incredibly complex trade finance is. Is it around improving customer service and competitive edge? You know, are you improving your corporate clients' experience? We know about the huge regulatory and compliance hurdles and challenges, which aren't necessarily a bad thing. They're incredibly important, but is it around addressing that key problem? And the last question, I think it's labeled wrong on the Zoom, but we'll pretend that says reducing cost and IT reliance, because obviously there's that cost burden. So I'll take a note of that. Point 4 on the poll will be reducing cost and IT reliance. So if you can vote now, because we're going to discuss that on this webinar. And actually both TFG and SureComp did ask our wide audience this same question. So we've got those results as well, and we're going to compare that to what you guys are voting for. Give you a couple of minutes to talk about that. And Anno, we had some interesting answers on the survey, didn't we? I think there's going to be a lot to discuss in this webinar.
Absolutely right. The service that we got from the result that we did actually do resonate with what we hear when talking to our customers directly, that the pain points mostly are shared across institutions. It's not a regional phenomenon. The patterns that we see are more or less consistent. whether it be large organizations, smaller ones, regional banks, or global international banks. There is a pattern that we hear. Don't want to talk too much about the results yet because we don't want to be, say, biasing the audience. But there's good reason also why the patterns that we see are predominant in the market. And yeah, be super happy to see whether the results of the webinar today audience is somewhat in line with what we hear in the market. So I guess the results are there now. So let's bring them up.
The results are in, and let's put them up on the screen. And if we can go on to the next slide as well, we'll show you the results from the survey. And I think let's talk about the first part, which is, most of you said that streamlining process efficiency and automation was the top answer, followed by improving customer experience and competitive edge. So slightly different to the answers that we had on the poll, but actually that process efficiency and automation is still within the top two answers there. Anu, can you discuss that? Let's talk about that process efficiency piece.
Well, it's absolutely to the point, because if you want to engage in the way, or if you want to streamline the way you interact with your customers, efficiency and automation is the name of the game. We'll see later on that the predominant means to interact today is still email-based, and that's not the way going forward. While that is in a way a digital channel, we all know that that's not the way digitization is meant to be, right? We don't want to scan an image and then just send an image. We want to make use of data, and so process efficiency builds upon the ability to use data and reap that efficiency that is just sleeping in that area. That in turn, if I just may go to the next one, will lead to an improved customer service, because the minute you can work on the data, every bank will be able to provide better service to the customers, because in the end, you don't just apply for a guarantee. You need to have transparency around the limit that you're using. You need to know about the cost that guarantee will occur. And the more data points you can use and connect, the better the service to the customer. So, and those banks actually improving their customer service clearly will have a competitive edge, right?
Yeah.
I mean, a little bit, you mentioned the benefits of regulation, and clearly there are still, I would say, many bankers that are responsible for running IT systems in the bank would rather consider regulatory to be a burden rather than a business enabler. And still, it is mentioned, and as we can see from the slides, typically bankers would name regulation as one of the key drivers for change, or say the other way around. If you want to innovate, if you want to bring technical systems to a bank, typically you can do that way easier if you can link it to a compliance topic, because that's where budget is more easily allocated to within a bank, right?
Well, and Anu, let's talk about that regulation piece in a bit more detail. What are the specific regulatory burdens, challenges, and hurdles that banks are coming to you and facing, and why is technology the potential answer to that within the trade finance space?
I guess that's very clearly, let's say there's two big blocks of regulation when it comes to trade finance interaction with corporates. The one, and by far the most important one, is the question about compliance. So making sure that the trade finance business transactions that you want to process on behalf of your customers are compliant to all the sanctions, the embargoes, the counter-terrorist financing, the AML. So there's a raft of regulatory requirements, especially for those banks that are active in more than one region, where, say, the most dominant regulatory bodies in the United States, the UK, the HKMA in Hong Kong, and the Monetary Authority of Singapore, on top of the European regulation, is just, it's not consistent, it's changing, it's ever evolving, so you need to be on top of things. That's the one big block of trade finance related regulation. And then the second big block is a growing regulation regarding how you manage data. Which data points do you manage? Is there personal identifiable information included, which, say, in the European Union, it's the GDPR, but there's similar regulations in all major jurisdictions. So that's the second big block of, are you on top of all that data privacy, data securitization, data secrecy topics, and these basically influence what you can do in the trade finance space and how you have to do it.
Yeah, and it's not getting any easier. I mean, you know, come out of trade finance and you see even what's going on with one of the most popular social media platforms, TikTok, and you're seeing that geopolitical situation is creating silos, and you're having this kind of North America, Europe sphere, you're having an Asian sphere. I'm guessing none of this is going to become any easier, right?
Well, we're not seeing it getting easier, and there's no silver lining on the horizon that we could all think, oh no, once we reach that point, it'll all be gone. It won't. So all bankers thinking about implementing a trade finance system solution, whether it be an internal one or one that engage with customers, it's just a necessary box to be ticked, that whatever you do and whether you build or buy, it really doesn't matter. The solution needs to tick the box. That's, say, it doesn't go without.
Yeah, let's talk about that automation and process efficiency piece. And 19% of our survey respondents said that was one of the biggest drivers for taking trade finance digital. And actually, I was at ICC UAE about a month ago, listening to some of the doc checkers speak, and some people and you know, some people said the pandemic almost didn't last long enough to encourage banks to fully digitalize their trade operations, and you know, all of the banks were coming into the office to check the physical documents. I'd also like to note from the wider SureComp survey that 93% of banks rely on email as the primary mode of communication within their trade finance customers. What does that say about the industry, and what are some of those drivers?
Well, that's a very good point. That if you look at trade finance, the whole trade finance industry from say, the head of transaction banking point of view, then trade is the last island where the communication with the customers is based on email. On the cash side, it's all fully digital. On the FX side, interest rate hedges, it's all digital. Yet in the trade finance space, the communication relies on email, right? And so that's why trade is the one area where an improvement is necessary. And while, say, SWIFT is the standard for the bank-to-bank communication, it's not for the corporate-to-bank side. There's less than 1,000 corporates globally that have a SWIFT account. And those that do have one mostly use it for the cash communication. So say in logarithmic scale, right, there's maybe 100 or less corporates globally that use the SWIFT score for the trade finance, so the letter of credit or guarantee communication. Yeah. And if you compare that to some 330 million companies that exist globally, I haven't counted myself, trust on the World Bank, you may say that they're not all doing trade. Fair enough. The ICC represents some 45 million companies. Now you can argue, well, maybe that's the global baseline for companies doing trade. Compare that to the 100 that use SWIFT. It's not the standard. So the only standard is email. And that's why improving that, bringing that to a digital communication is such a lever for operational efficiency improvement, right? If you take the email to data exchange, you have just massive improvement of your own internal operations, right? And whether it's 90% or 70% or even 60%, to be frank, it almost doesn't really matter, as long as we're talking that big a chunk of transactions that are applied for by email. And so again, within a trade finance team, the only way or the easiest way to increase operational efficiency is to pick the application step for a guarantee, for a letter of credit, and just friendly invite your corporates to use a digital channel to apply for these instruments. Yeah. Now, and that's why, again, trade finance is in the focus of innovation projects or initiatives at the banks, and it's relevant, right?
Yeah, thank you, Anu. And perhaps let's go into talking about process automation a bit in a bit more detail. And if we can go on to the next slide. Anu, can you explain the urgency for banks to undergo that digital trade transformation journey, considering, and from the results on this slide, that a significant proportion of banks, some 59% of banks and 70% of corporates, have yet to implement those digital trade finance solutions, despite 71% of banks and 73% of corporates actually acknowledging process automation as a top priority amongst internal stakeholders?
Yeah, so I just already elaborated on why it is trade finance. Now you may ask, why automation and why now, right? You always want to invest where you get the biggest return, or a bit more frank, the biggest bang for the buck. And if you invest in an area that has such a high share of, say, manual work, and ultimately the email leads to a manual process within the bank, that's the area where you want to focus. So the question is, why now? Can't we wait? Well, of course you can always wait, but then you just don't get the efficiency improvements, and eventually your neighbor bank or your fellow competitor, they will just do it one step before you, and if you bring down the operational cost, you ultimately can give that as a price benefit back to the customers to win more business, right? So the interesting part is the process automation is top of mind, not only from the banker side, but also from the corporates, right? Many corporates, and not only the big giant ones that actually eventually use already a digital channel, but the mid-market, the broad range of mid-market corporates use far more than one bank. Like, I mean, one handful, two handful of banks easily with mid-markets corporates. So even if a bank has a portal, it's not exactly a solution that is fit from the perspective of the corporate. So clients want an automated way to, or a digital way to talk automatically with their banks. There are proven solutions out there that can enable that. And the savings that you get if you invest in that are immediate, because you will immediately see the operational efficiency gains that you get from using such digital channels. So it's rather the other way around. Given that the need is obvious, the return is immediate, why should you wait?
Yeah, no, it's a good point. I think, look, we're all in general consensus that the automation piece is incredibly important. Just going back onto that part of the survey around the regulation and compliance piece, I'm going to ask you a question from the audience, because I think it's quite relevant. So trying to get that compliance regulation implemented, I presume within a bank, is very important, and also keeping that cost down. How can vendors such as Surecomp, such as yourselves, help banks keep those variables under control when keeping up with the regulatory pieces?
Yeah, that's a very interesting question. And the one advantage, not linking that a bit to the title of this discussion, buy versus build. Technically, as I would, if I ask my head of R&D, can we do this? His answer will always be technically is possible. So technically, a bank can build almost everything on their own. Now, question is it the most economically recommendable way to go? And especially that one, whenever you deal with a changing market, recommends to work with partners that can focus on that. So our solution to that topic is that we will always offer the banks a best of breed approach, and keeping that up to date on our own, so that the users will use a service. So if the service would be, we'll get you solutions for compliance checks. These solutions will be up to date automatically, almost on a daily basis, right? They will link to the relevant lists on a more than once a day updated basis. Why? Because the transaction may be okay in the morning, and then if a relevant authority midday announces a new sanction being in place immediately, in the afternoon, the very same transaction will be blocked. And if you use that service rather than building a solution yourself, you will be automatically up to date always. And that's the benefit, that's the beauty of, especially in these highly critical and ever-changing environments, it's recommendable to go with specialists, let me put it that way.
Yeah, absolutely. Now, I know.
And to the audience, I hope that does answer the question.
Thank you very much. Now, I know I'm going to delve deep into your history. So, well, before Surecomp, you're at Commerzbank, right?
Yeah.
And just over 8 years there, and I think the majority of your time you spent within the trade and cash teams. So I'm going to ask you a question, but not with your Surecomp hat on, but with your Commerzbank hat on, around that question of, do we build the solution in-house or do we buy a solution? Because I'm sure you had that conversation with your exec several times. Can you talk me through the thinking process from a bank perspective on those decisions?
Yeah, happy. Yes, I've been at that, say, point many a times, and it's not common to just one bank, but bankers regularly get to that point. And one senior banker once told me, look, we will take a decision to buy versus build following a very simple framework, right? Is the business in discussion strategic or not? If it is strategic, also, let's go the other way around. If it's not strategic, very clear case to buy versus build. If it is strategic, the second question is there a market out there for solution? Now, what does market mean? Is there more than two vendors that offer a competitive solution, right? And if yes, again, it will be a clear case for a buy solution, even if the business is strategic. And only if the business is strategic and there is not a market out there. So there may only be one provider offering a solution. Then a rather clear case for building it in-house. Because you don't want to, from a strategic point of view, you don't want to create a dependency with one external vendor. If the business is strategic, then you want to rather have it under control, taking into account that you buy some downside. Oh, not buy. You get some downside with it. One of that being the, say, compliance topic that was just asked from the audience. Others, maybe you don't have that up-to-date version, you don't have the latest and greatest, but you opt for strategic control. That's fine. So in the other three cases, not strategic, and there is a market out there, there's sufficient competition out there, it's rather a strong case for build. Now, if we apply that very same logic to the trade finance business up for discussion right now, most of the banks, I would outside in argue, trade finance is a strategic business, right? Cash is core and trade finance is just adjacent to it. You want to offer trade finance business because your corporates are asking it. That's, I would say, for the vast majority of banks out there, that's the scenario. Then there's clearly, say, the leading trade finance banks. They offer trade finance because they want to offer trade finance and they want to have competitive edge in trade finance and they push trade finance forward. Okay, clearly also strategic. So it would rather be the case of, are there, so the key question would be, are there sufficient vendors out there? Is there a market for competitive solutions? And in trade finance, the clear answer is yes, there's sufficient solutions out there. Why do I know? But sometimes we are in RFP situations and there is others, let's put it that way. Yeah. So yes, it's strategic. Yes, there is a market out there. So in the trade finance space, I would argue that outside in, for the vast majority of the bank, there is a rather strong case to go for buy versus build. Why again? You will be way faster in implementing your solution. You will have a solution that's always up to date, and you can ride on all the benefits that it brings, like using modern SaaS solutions to not bother your internal IT teams and all that. So again, from having worked at the bank and having talked to a number of other, say, trade heads, I would argue that there's a case for buy versus build your own in the trade finance space.
Thanks, Anu. And I would encourage anyone who is a banker here and thinking about those discussions to share your opinion using the chat function. And please feel free to do it anonymously, irrespective of which side you're on. We want to hear your opinion. And actually,
There's one question
Yeah.
that I guess it nicely fits into the framework that I was just alluding to. And the question is, while using services of a third party, how the company or a bank can address integrity and data safety?
Yeah.
That's a very good question. And that relates to the second leg of the regulation that banks are faced with. Now, there are frameworks of which typically you should ask the vendor to comply to the relevant standards. Now, what are the relevant standards? It's ISO 27001 and SOC 2. And it's like, say, that chain of trust. It's economically impossible to run every single check that you need to confirm vis-a-vis your regulator with third parties that you want to do business with. So we all rely on standards. And these two standards, there are a few more, but these are the major ones, the ISO 27001 and the SOC 2. If your vendor complies with these certificates, with these regulations, then you can rest assured that your data is being kept secure and the integrity is the integrity is kept that way. Yeah. And these questions, what are the standards that you, dear vendor, comply with, are a must-have in any RFP, in any assessment grid that you as a banker would apply to a vendor.
I mean, Enno, just to go into that in a bit more detail, can you explain the kind of processes that say SureComp will have to go to ensure you are ISO 27001 and SOC 2 compliant?
Well, yes, I can. That will have the risk of becoming very detailed, so I try to keep it high level.
High level.
The high level. These regulations ask the question, as just been raised, how do you treat data, and how do you organize your internal processes to make sure that the data you're processing on behalf of customers are being kept integer and safe and secure. So typically it will be a self-assessment where a vendor will read the relevant regulation and apply it internally. And then there will be external auditors, like the usual suspect audit firms, that the vendor will invite for a regular, typically an annual check, and the auditor will assess and hopefully approve and confirm that the company, the vendor, is implementing and adhering to all these standards. And again, that chain of trust. So the bank would trust that these two regulations are the relevant ones. The vendor will self-attest, yes, I comply. And then there will be an external auditor, a renowned brand, a trusted brand, that will screen the vendor. And ultimately, you as a bank, you can trust the auditor, again, that will be a renowned brand, and say, okay, say one of the big four has assessed that vendor, give the green check mark. So iBank can trust that that vendor actually does apply and comply with all these regulations. That may be, in short, all around data security, data processes, data secrecy, and the processes to develop software and stuff. Sorry.
Thank you, and I think still an important question that anyone should ask any vendor at that kind of RFP stage. If we can flick onto the next slide, because we asked the audience, do you already use a trade finance solution? Yes or no in the SureComp survey, and actually, 59% of people said no, we don't already use a trade finance solution. So actually, I'm going to flip it, and let's start with the build in-house option before we explore the buying in solution. And are there any examples that you can share of banks that have successfully developed that in-house solution, and what were the factors that contributed to their success? Because, as you mentioned earlier, there are significant integration hurdles, IT investments needed for multiple platforms to cater to the different aspects of their operations.
Yeah, of course there are, no doubt. Otherwise, the topic wouldn't be apparent. Otherwise, it would be a no-brainer. Say, if you want to be active in that business, you need to buy. Let's look at very successful ones, retail online portals. So as in the retail space, banks have very successful own build solutions. Right? You have a mobile app and it works very nice. Now, why is it? What are the key reasons why in that space predominantly build solutions are apparent? Typically, retail customers only deal with one bank. And typically, the retail banks have a regional focused approach. So they know their target customers very well, and they know their preferences and requirements very well. And building that solution, they can nicely and very neatly build the solution to cover exactly the scope of services or functionalities that the bank is offering in that space, which are not globally standardized. Now, if you take that to the trade finance again, there are key differences. Trade finance products are standardized. Not the technical communication, but the product itself. So the letter of credit and the guarantee, there are the ICC rules that standardize that business, right? So in trade finance, in order for the products to work, all systems globally at banks that do trade finance need to process the very same product. So there are hints towards why in trade finance you would want to have a, well, not want to have, but there are hints towards that buy option. Now, there's one question from the audience saying that ideally banks would buy rather than build trade finance systems. The problem is some vendors' base models are so basic that as a bank, you can end up asking for change requests that become as costly and time lengthy as building it yourself. Well, whoever that was, it was without stating the name. That is a fantastic question because it again hints to, I was telling that there are very many solutions out there in the market. Well, apparently you must have had an experience with a vendor that was not a trade finance specialist. And yes, then sometimes while they on the very high level say, I also do trade finance, if you dig deeper, then the scope of functionality is not as rich as you as a apparently sophisticated trade finance bank want the scope to be. So while there are like trade finance solutions and trade finance solutions, the recommendation clearly is to go with a trade finance vendor that is focused on trade finance, because then you will get a trade finance solution out of the box that will cover your needs, right? So I hope to have answered that question.
Yep.
And again, yes, there are successful build stories. I would challenge whether the trade finance business is just the best area to go for build.
Thank you very much. And yeah, I guess that scope is incredibly important and something that should be discussed in quite a lot of detail when doing that RFP process. I guess on the other side, are there disadvantages, do you think, of opting in for an external solution? I'm thinking here, you know, once you're in, are you in for good and are you stuck?
Well, I would guess the question that we just got was a little bit towards that, right? You start off with a vendor and then you realize that you need more and it's not easy to get out again. Of course, there are disadvantages of building, right? There are disadvantages in buying a solution. Yes, there are disadvantages because depending on what vendor you buy from, you need to eventually integrate multiple solutions to cover your own bank-specific functional scope, right? And then going by may end up in having to integrate and nicely fit together like multitude of small specialized solutions. And then you'd have a purchasing process that, well, may be best described with a nightmare. And eventually you have an internal IT integration project that qualifies for the same name. So if this is the blueprint of your buy IT landscape, there are definitely disadvantages. Now, again, there are also solutions where you say, this is my functional scope. And again, clear recommendation that if you go RFP, rather invest in writing a very well made RFP, that in the RFP process, you really ask the vendor for showing the full strength of the solution, and also the deficiencies or gaps that there are. And there are always gaps if you compare an out-of-the-box solution to a very individual functional scope of a bank. And you get a very clear understanding of what you're buying before you actually sign the contract, right? And then again, linking back to the change request story, in these days, SaaS solutions are very strong, and typically you don't end up having change requests to SaaS solutions, but you do suggestions for product enhancements, because once the functionality is in the product, right, the vendor takes care of keeping it up to date, and you as a bank, as a single user, you don't need to. So I guess in these days, there are far more attractive options for banks rather than just going I buy what is available today, and then on-prem I go and customize it for my own use.
Yeah, and I think that brings us nicely onto the next part, which is talking about that case for outsourcing. And look, Enno, it's been quite the year, the past 12 months or so, in terms of what you've seen with the digital islands, the digital platforms, and let's be completely honest here, many of them are really struggling right now, if not have gone bust. I'm actually going to start with the question from the audience, which says, I find that many trade finance vendors sell their trade finance platform in quite a modular way, which tends to drive up the cost to buy. And I find that there are truly no out-of-the-box solutions. What are your thoughts about that?
I could give you the name of my sales head. No, I'm seriously. Yes, I agree. I agree. The market is not standardized when it comes to that point. And as a bank, you need to take care to choose the right vendor, definitely. Because there's just not one big shopping list and all the offers are the same. The commercial offers, not the technical solutions are the same, nor are the commercial offers. So you want to take care for that. Now, I can tell you from my own experience, now working with SureComp, there are solutions that have a very clear and easy to understand price grid. And I guess that's also one of the recommendations that I can give to a bank. If you are selecting a vendor, you want to make sure that the business model of the vendor is aligned to your own business model. Now, what does alignment in that case mean? It doesn't mean that they make money on your business, but that they are complementary because they're offering complementary services. The bank is in risk of the business. So for the bank, it's a complete different story if the LC has 9 digits versus 7 digits, right? Complete different internal process. There are different people talking about that 9-digit transaction versus a 7-digit transaction. For an IT system provider, it makes no difference. It's a transaction. It really makes no difference. There's no high cost for that system to process a 9-digit transaction versus a 7-digit. So why should the vendor eat into the business of, oh, now that it's a valuable transaction, I actually charge more? Then there's strategic misalignment because the vendor all of a sudden would earn more money just because the value of the transactions goes up. That's the business of the bank. So I could only recommend a bank to choose a partner, an IT partner that focuses on IT. So if I as a bank get more value, more services from the IT platform, well, it may be justified to pay a higher price, but not just because my banking business grows, right? And that, I think, is hopefully an answer to that question, that there are solutions out there that have very clear pricing grids that keep that difference of this is tech business, this is banking business. You earn on the latter, the tech vendor earns on the earlier one.
Yeah, thank you very much. And I guess, look, this is still in relation to that you know, do I build sorry, do I buy in the solution, and referring to the just over 40% of you that said that is the case. Let's talk about the technology itself, and Anna, you'll remember well, three years ago, blockchain was the buzzword, so much so I made a periodic table of about 56 of them using them, and I think, you know, that there aren't 56 today. But there are future technologies. Artificial intelligence is being used very actively in all areas of life. And there are new and emerging technologies. There are also the conversations around, you know, a solution which is a front-end solution or an API-based solution for the banks to use. I guess the question is how as new and emerging technologies are coming to the fore, should banks be considering the uses of trade finance vendors, given that we're in such a proliferated industry? Banks are kind of having to spread their money and scattergun their money into several different solutions, knowing that they're failing, and also navigating this really complicated, fast developing industry.
Yeah, it's a very, very relevant question, and I will not elaborate on the blockchain platforms that have gone south, but just on that, say, AI thing. I asked ChatGPT once, what would be the requirements in selecting a trade finance platform? The answer is amazing. So for any of the audience, just do that. Just give it a try. It is super interesting. Now, why do I say that? If you select a trade finance vendor, you want to make sure that there is continuous investment in the solution. Why so? Because you never know which technology or which functionality will be the winning one tomorrow. And again, outside in, with all due respect for individual banks, most of the banks do not have the R&D budgets that they are allocating on trade finance to keep their own solution cutting edge. They don't. And therefore, you want your partner, your vendor doing it. So what are the key criteria to select a vendor, to do a good choice? It's always recommended to put yourself in your customer's shoes. So from your customer's point of view, it needs to be an outstanding UX, user experience. It's more than a nice look and feel. It's the experience that if I interact with that solution, it is state of the art. Now, state of the art these days is driven. We are all used to using mobile phones, right? You don't get a user training on unboxing your new mobile phone. You unbox it, you open it, and you start using it. Oh, I'm using the one with the like fruit logo, right? There wasn't a person training me in how to use the iPhone, right? So you want to have a solution. You as a bank, you want to have a solution where your corporate customers can use it as easily as using a mobile phone. Number one. Then talking about the functional scope, it's second, right? The functional scope is second. Why is it second? Because this is evolving. Even though trade finance may be perceived as a very static, a very old, a very traditional business, it's not. And the experts among the audience, we all know that it's not. There is evolution. Now, the evolution is not as obvious as in other business areas. So the functional scope will be adjusted over time. So you want to work with a vendor that, again, is continuously investing in the product to keep the functional scope up to date over time.
Yep.
And even though some banks may still prefer a mono-banking solution, you want to have a multi-lender solution. Why so? In the cash business, it's the standard, right? Every corporate has more than one bank to do the cash business. Same as in trade. The vast majority of corporates doing trade do it with more than one bank. So to ease the life of your customer, you want to be able to offer a multi-lender solution. And if you're connected to that multi-lender solution, you can grow your share of wallet. So it is also good for yourself, right? You can increase the share of wallet at the cost of those financial institutions that are not multi-lender approved or equipped, Right. Now I say multi-lender, not multi-bank, because in the trade finance space, other than in the cash industry, there's also insurance companies that provide funds or guarantees to corporates. So, and you want to be there where your corporates are. And last one, it's the strategy, and I already alluded to that the IT provider should be strictly separating their own business model from the business model of the bank, because just because there's access to the data and also to the volume of or the value of a transaction, that there shouldn't be a mix of which is mine and which is yours. The value of the transaction is the business of the bank, and the technical connectivity, functionality, UX is the business of the IT vendor. And these four, right? The UX, the functional scope, the multi-lender ability, and the clear strategic alignment should be the key criteria by which banks should definitely assess their vendor.
Thank you very much, Enno. And if we just go on to the next slide, I think there's a bit of a summary, because I think talking about the business case is incredibly important. And I'm going to reiterate what you said again. You know, thinking about that customer experience is absolutely crucial. Thinking about the functionality, the multi-lender solution, and the strategy. Actually, when we're building that business case for whether to buy or whether to build, someone's commented many major trade finance solutions are similar in functionality and implementation, and they usually rely on the quality of vendor support from a technical and functional perspective. So that's that part two of what you discussed. Can you talk about what should be challenged? You know, how should banks challenge vendors in terms of that functional and technical support?
Just one comment on that question, because we also are faced with that question quite a number of times. It comes with the nature of the trade finance business. Again, the letter of credit is standardized. So every vendor that claims itself to be able to process a letter of credit must do the same. Now, in the core of it, right? And now there's, of course, a JCAN functionality to it, but in the core of we can process letters of credit, we all do the same. And that's the benefit of it, because you want all vendors to do the same. That's key, that you as a bank can ultimately change the vendor, right? Because if the one vendor was doing something very special, which is, again, in trade finance, it's a bit difficult, because then eventually it's no longer a letter of credit. Yeah. So now, okay, let's talk about the blockchain platforms that went down. They did not process a letter of credit. And that's part of the reason why they went bust, because you had to go with them and only them. There was never a way out. That's why, right, again, so story told. Yes, functional scope is very similar for a good reason from the perspective of the banks. Now, what should banks challenge the vendors with in terms of building the business case, right? Linking it back to the key reasons for actually going digital. Can I relieve my regulatory burden? Well, if yes, that's a clear case to increase the business value of the solution. It may be a little cumbersome to quantify. Is it $50,000 worth of, is it 150, is it 500,000 worth of? But it is a value driver, clearly. And every committee in a bank will accept that if you can clearly link that solution will reduce my regulatory exposure or regulatory risk in the business, because I will have the latest and greatest compliance checks built in, there's a value. Then the second big topic is the reduction of the total cost of ownership. Right? Now that consists of capital expenditures or one-off investment needs and ongoing regulatory operational cost. And it's spread across the application itself, the setup and the operations of the application, the need for internal IT sources to run the servers, to run the operation, and my operation teams, so the people actually processing the transaction, right? If you can reduce the total cost across the whole chain, then the solution has a positive business case. And the last step, but it's the last step, is can I increase my revenue? And I just already gave an indication of why and how that's possible, right? Can I do more business with my existing customers? Before I think about onboarding new customers or onboarding new markets, I do have existing customers. How can I do more business with the same customers? Well, just go to the places where they select which bank they do the business with. And again, that leads to why multi-lender solutions are so important. And with these three, can I reduce my regulatory risk or exposure? Can I reduce my total cost of ownership? And eventually, can I increase my revenue? That would be the key components to build a business case. And hey, challenge the vendor. Dear vendor, where can you help me excel on 1, 2, and 3? Right.
Thank you very much. Question about paper, or rather removing the paper. There is, as you know, or as many of you may not know, perhaps I know you could explain, there is a documents bill, the Electronic Trade Documents Bill, that's going to be enacted and passed in UK law any minute now. It's gone through the House of Lords, it's going through the House of Commons now. And the key facet of that piece of common law is essentially an electronic trade document can replace the paper document. And I'm talking bills of lading, promissory notes, warehouse receipts, etc. How is this law, Enno, going to impact trade finance from a bank perspective? And also, how is Surecomp as a vendor operating within this space adapting to that change of law that's imminent?
Yeah, directly reducing operational cost. Now you may wonder why a law being passed by House of Commons and Lords will help me reduce my operational cost. It does, clearly. And there's one question also regarding the MLETR and bill of lading, but it's more than the bill of lading. Think the promissory note or bill of exchange. It's no longer, as a matter of fact, it's no longer relevant in the market these days because the operational cost of processing a bill of exchange or promissory note on paper is just prohibitively high. If we can offer that through a digital document where the original, the one that I go to court with, is the digital one. And that's the, if I try to summarize very quickly, that's the nature of the bill that's being passed, in the process of being passed. So the digital record is the original. Well, then processing data reduces the operational cost of issuing a prom note or a bill of exchange dramatically, so that all of a sudden that centuries old product, standardized by international rules, all of a sudden it's attractive again. And me and my team, we can offer it at competitive rates. So that's a very interesting aspect of how a new law automatically revives a product at very efficient operational cost. And having a system where an engine to produce digital documents is firmly built into the process, clearly, again, yet one more example of why going with a specialized vendor's solution will give you long-term benefits, because today maybe the digital guarantee, tomorrow it's the promissory note, and the day after tomorrow, well, let's see, right? Whatever is up to date then.
Thank you very much, Enno. I guess, what are the next practical steps for banks who are either considering exploring vendors, opening out to RFP, perhaps they already have a vendor solution in place, but they're not necessarily happy with it, or they're already, actively looking. What are the practical next steps you'd recommend bankers to consider if they're looking for these solutions to buy trade finance solutions to kind of help their businesses?
I would always say, go out there and talk to your peers openly. I mean, I experience the trade finance community as a very open one. There's that co-opetition, right? As a bank, you do compete with your fellow bank, and yet at the same time, there's a very open trust and the willingness to share internal setup questions with the other banks. Go do that. Ask openly, hey, how do you solve that problem? How do you solve that problem? Go ask potential vendors that you, on your long list, consider as relevant vendors. Go ask them for solutions. I think that the most surprising thing is most of the times implementing a solution comes at far less cost than you would imagine, because these days with the maturity of SaaS solutions, not with the evolution of, with the maturity of it, implementing a SaaS solution can be at costs that are less than 1 FTE of a bank within the bank ops team, right? So it's really not the cost issue. It's the, am I ready for change? That's most often the times it's the far bigger hurdle for the actual change than the availability of a solution, the time it takes to implement the solution, or the actual cost of the operations of that solution. These are typically not the hurdle. It's, am I ready for it? Do I think it's the solution that would fit me in my business? And go out there and check. You'd be surprised by the answer. Yes, it is.
Well, thank you very much, Enno, for your time. And I think we've covered lots of really interesting ground. And I think it's fair to say we've explored both sides of the story in quite a lot of detail. And I'd like to thank our listeners for asking some really good questions around that regulatory piece, the integrity and data safety, which is incredibly important, the adoption of the MLETR law, or the equivalent of that into UK common law, some of the problems we face with the banks, with the vendors offering quite a base, simple model, and actually it all stacks up as they ask for more technical functionality, etc. And also that future piece around, you know, what's coming next and how are we adapted. I think I'm going to summarize this webinar in 6 not points but questions, which is questions that all of you on listening in on the webinar should be listening in on. First of all, can I relieve my regulatory burden? Is this strategically important for me? Can I reduce the cost and internal IT reliance? Will I be able to keep up to date with the trade finance security side, the messaging types, the ISO, the SOC rules? Can I increase revenue? And I think most importantly, am I ready for change? And I think the piece of advice really is around talk, educate yourselves, whether it's, you know, with yourselves, whether it's with others, with industry practitioners, and engage in that dialogue, because that's really important for our industry. Enno, do you have anything else to add?
That was a very good summary, Dipesh. And I can only say, well, talk, ask, reach out, explore the market. There are solutions available that will fit your business. And
I didn't realize this slide says my summary. But look, to the guys listening in on this webinar, the webinar is going to be available online to download from SureComp, and we'll point you to that from Trade Finance Global's website as well. But thank you very much for joining. It's been such a great webinar, as always. Really good to see you. Thank you.
Thank you very much.
Take care.